May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the pound USD, and also known as cable. Yep. Listen, I just put out the Euro USD and the US dollar index analysis for the week. Make sure you go check out those videos. All right. Make sure you go check out those videos. I'll leave links to them at the bottom of this video. Okay. Now, as far as next week on the economic calendar, let's take a notice here that on Monday and Wednesday we have no red folders. So you want to lay back on those days. Be extra careful if you're going to trade. If you're not going to trade, that's probably the smart move because markets can move a little herky-jerky, a little unpredictably on low volume days. All right. Friday is the big day. Core PCE. This is the preferred measure of inflation for the Fed here in the US dollar, in USD, in the US. If the numbers are higher than expected, higher than the 3% expectation, then the US dollar will gain strength. It'll get weaker if the numbers come in lower than expected. These numbers are going to have a high impact on the decision making when it comes to cutting the rate or not by the Fed and most investors are thinking that there's a 76% chance that the rate will be cut on the next FOMC. All right, we will find out. Fed Chair Jerome, what's his name? Jerome Powell. Sorry, he's already talked, dovishly about the cutting the rate, and that he kind of intimated, hinted towards that he may go ahead and cut it. We'll see. Now, as far as the pound is concerned, look, this is the monthly time frame. All right, we've made a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, and we are looking for the next lower high if this bearish trend is to continue. All right, that's just basic structure stuff, right? Just basic structure. All right, and here's the deal. We are in correction territory. What do I mean by that? Why did I just put a dot there? All right, this is the correction territory. What I'm talking about is using the Fibonacci retracement tool here. You can see that after this impulsive move, this is the correction, right? Usually we're looking for the correction to be between 50 and 78%. All right. This is the golden ratio. This is the most, I'm looking more towards this one because this is the most frequent one that's hit, right? But you can see price went higher than that and actually took out the 786, traded above it. Here's the deal. Price pushed back down in July and closed below that low of June, right? And you would think, okay, prices are probably going to trade towards the low of July with the next candle. Well, price did do that. That was the first thing it did. All right. And pushed back up, correcting this move. And what I'm looking for now is, are we going to trade higher than the 786 of the previous candle? All right. I want that. I always look to see if 50% of that body is respected. All right. And, but no more than the 786. All right. We're at the 618. We're just below it. And there is a chance, like I'm just saying, that price is in correction territory. All right, we are in correction territory. We haven't broken this high. The swing high that created that last bearish impulse. When price breaks that high, that's when we become bullish. That confirms bullishness, and we can expect price to continue higher. We're still in the correction. We're still in correction territory between this high and this low. Right? Everything that happens in between here is noise. Even though you might see a break of market structure, like say this low or this high, and you say, oh, okay, but it's internal. It's internal. All right. It's not the swing points. All right. So we see a swing high. We say, okay, well, that would mark the end of a pullback or something. All right. I was thinking that this move down here, this bearish move down, broke these lows, broke that low. That looked like a market structure shift. All right. But that's not what happened. It went back up. All right. So again, this is correction territory between the high and the low. All right. Now, if price breaks that high, there's a good chance we're heading towards these highs. All right. And let me also mention too, price looks bullish. All right. Price looks bullish. We've been bullish since September 2022, making these moves higher and higher. All right. So it does look bullish. Okay. But the structure, when we're talking about higher highs and higher lows, we are bearish on the monthly until this high is taken. All right. And that's just the technical aspect. If you have a different outlook on it, a different way to look at that, give me a comment and I would love to discuss it. All right. Now, I also want to point out this bullish fair value gap here. All right. It has not been tapped yet. And that's going to be a draw. If you ask me, that is going to be a draw on liquidity, because this is internal liquidity and this high is external liquidity. This high is external liquidity. We've already taken external liquidity and we look for a price to pull back to internal liquidity before it moves again to external liquidity. That is the higher high, higher low, higher high, higher low dynamic of a uptrend. All right. Okay. So while I don't endorse people taking shorts right now, I don't know, because it's too much bullish momentum. Look where we've been since January. 7 months of bullishness. We get 1 month of bearishness, and then we're starting to look like we're going to resume that bullishness. I'm not telling you to take shorts. I'm telling you that we are still in correction territory, and there's a chance. There is a chance that we could respect that high and continue down. There is a chance of that. Just keep your eye open for it. That's all I'm saying. This week, let's go to the weekly time frame. Now, on the weekly time frame, you can say this: we broke structure here to the downside. Boom, and then we broke this high. Okay, we're bullish. We're bullish on the weekly. I would agree with that. I would agree with it. Yeah, there's a lot of momentum, and the weekly shows it. All right. However, you see this candle here? That is an institutional bullish candle there, man, and it's impressive. It's very, very what do you call it? Impulsive, right? It's impulsive. Created a nice bullish engulfer to the upside. That's a bullish candle, a bullish indication. And then we come back and take that out. This automatically becomes the change in the state of delivery. All right. This becomes, when price closed here, becomes a bearish order block. And we correct up into that order block. We correct up into that CISD. And I want to see how the market responds, because this again, is another argument for the possibility of price turning bearish. I'm not telling you to take sales yet. I'm just telling you what I'm reading. I'm just showing you what the market is showing. Look at the pullback. We're at 618, all right? From this last move to the downside where we take out this institutional candle here. We take out that low and push up. This is an area that says, hey, we could turn over. We could turn over. There's a possibility that we could turn over. I'm looking at you right now with my eyes to the side going, with them wide open. Hey, be careful because we could turn over. Yeah, it's bullish. It's moving bullishly. But is it only bullish because it's a retracement? That's the only thing I'm giving you right now is that kind of food for thought. That CISD is real. The change in the state of delivery. Let's go down to the daily. Now, I pointed this out in my last forecast. We have that move up. Didn't quite trade through the bottom. We'll push back and then boom. All right, that's bearish. That's a bearish break of market structure. We are bearish. We pull back up. Aha, we take out the high, but we don't trade through that high. We don't trade through that high. We raid the high. You understand? We raid the high, take out the sell side, buy side liquidity, and push down. All right, and then we have this news candle pushing up. All right, why didn't that news candle push higher? Because it ran into an opposing candle here. Boom. All right, that's what you usually see. And it might just be respecting it for a pullback, maybe to make a bullish fair value gap, and price could move up higher from there. All right, because this is quite the recovery here, right? It's V in shape, but it's not a quick recovery. See how impulsive this move was down? This one looks like a pretty good recovery. It's not exactly corrective in structure, but it kind of looks like, because it took way more candles. But what we have here is you can call it a double top. Are we coming back for another double top? Are we going to crack through and continue up higher? There's a good chance of that. And I would suggest buys in this market, but I would say keep an eye out for price to turn over, because we are in correction territory on the larger time frames. Go back to that weekly and think about that. Go back to that weekly and see that this swing structure has to be taken out in order for it to confirm bullishness. All right, and we are right at the 786 Fibonacci retracement, as this lower low, this lower high could still be made for another move down for a lower low. Just pointing it out that's there, and be mindful of it. But if we're going to go with momentum, you can see we've been bullish since January. All right, and if you go back further than that, we've been bullish since 2022. Okay, so, but again, we are in correction territory between that high, that swing high, and that swing low. So just be mindful. I would love to see a break of market structure here. I would love to see the break of market structure on Monday, between Monday and Tuesday, to the upside, so that I can stick with a bullish bias. Because right now we're in the middle. We are in the middle of this trading range. Right in the middle. I want to see a trade through these highs so that I can take safer buys. All right. If it doesn't take out that high, listen to me. If it doesn't take out that high and price gives us a bullish fair value gap here, right, and inches its way up and then crashes through that bullish fair value gap that it gives us on Monday or Tuesday, then look for the pullback for sales. That's what I'm telling you, straight up, because that's what I'm going to do. That's what I'm going to do. All right. I don't think this, what do you call it, double high or whatever you want to call it, double top. I don't think this double top is going to, it was put there for no reason. I just don't. We'll see. We'll see what it does. But you get my forecast. Yeah, bullish until we get a break of market structure. We get a break of market structure, then I'll turn bearish. But until that happens, bullish all the way. I'm looking for buys, and I want to take it on a pullback into a fair value gap. That's what I would like to do. All right. I hope you enjoyed the video. Make sure you check out the US dollar index, the US dollar video I put out earlier today, and the Euro USD one I just put out just before this one. And I hope to see you in the next one, which will be the S&P, and I will see you in the next video.